Welcome to another edition of Geopolitics and Empire. Quick reminder, support the podcast. Best way you can do that is by becoming a paid subscriber on the Substack. I do a commentary once a week in video format now for supporters only, and we do group Zoom chats every week or two to shoot the breeze on world events. You can donate, you can purchase a console if you want to chat with me. Do check out all of my affiliates and leave a podcast review. Por favor, we have a new feed. I transitioned the old feed. Our new feed is Geopolitics and Empire.com/feed/podcast, I believe. Joining us for the first time is Tillman Holloway, a former All-American first-team All-Big 12 guard at the University of Texas, who transitioned from a successful football career to over a decade of expertise in Bitcoin and blockchain technology. Today, as the leader of Arch Public, Tilman is driving the revolution in trading automation, utilizing advanced features in crypto algorithms through strategic partnerships with renowned YouTuber Scott Melker and Gemini, the leading crypto exchange co-founded by Cameron and Tyler Winklevoss. Arch Public is expanding its reach and influence. The company empowers traders with institutional-grade, rule-based strategies that eliminate emotional bias, enabling users to confidently navigate both traditional finance and crypto markets. Arch Public's software removes the anxiety of predicting market movements, offering a solution where there's no need for a crystal ball to predict the future, just data-driven automated decision making. Welcome to Geopolitics and Empire, Tilman.
Thank you so much. What a lead-in. That was fantastic. I don't know who wrote that, but they did a great job bragging on me. So I appreciate such a warm introduction.
Yeah, thanks for coming on. And as people can tell, today's topic is all things Bitcoin and crypto. And just so you know, on the podcast, I've had a range of guests on the subject, right? We've had Bitcoin maxis, people who are big on cryptos, but not necessarily maxis, people who are highly skeptical of Bitcoin and crypto, yet still use it to make money and transact, folks who prefer privacy coins like Monero or Zeno, and people who don't want to touch crypto with a 10-foot pole. And so given your, I kind of like to, talk with everyone because I don't know what's going on, and I bring on experts such as yourself. And so given your work and expertise, how would you sort of explain, what is Bitcoin, what is its value, and where is it going? Because there's a lot of developments, right? There's talk of strategic reserves. Countries are buying it, like El Salvador and so forth.
I think there's a lot of there's something I tell people all the time. It's like, you're most loyal to the crypto that's made you the most money. That's just human nature. And so if you talk to a Bitcoin maxi, most likely Bitcoin's made that person the most amount of money. If you talk to a Solana maxi, they've made a lot of money in Solana. And so, that's really what the tribal native, bias is all about. It's really about how much money you've made in each coin. I started out in the industry not based upon price. I started out as a miner. I was fascinated with this notion that if you had a electrical outlet and you had a computer, that you could participate in a banking system. Like, that notion really blew my mind. And then I saw, computers as these little money trees that you just had to find a place to plant. And so I fell in love with the technology at a protocol level, and that gives me a very different outlook. Like, I'm not a maxi. I do think Bitcoin carries unique characteristics to it that no other coin carries, and one of those, and the largest in my opinion, being the fair and equitable distribution of its currency. I think in order to trust a monetary system, you have to trust the inflationary rate, and you have to trust where the money gets originated and how it gets to the people. And in every instance, both with fiat and with crypto, other than Bitcoin, there's been pre-allocation. There's been people that have made the decision of where some of the coins go, and it's made people very rich. The founders typically very rich, and so even Ethereum, second largest coin by market cap, there's an Ethereum Foundation. And in the recent headlines, there was a discussion about, should the Ethereum Foundation roll back the chain before the Bybit hack? The Bybit hack happened, this week, and it was the largest hack in the industry's history. $1.6 billion of Ethereum was stolen, and that would make that whoever stole it the largest vote in proof of stake protocol. And there's a real question as to if the Lazarus group stole that's who's claiming credit for it, which is North Korea, right? And so there's these national security ramifications and implications based upon now who has $1.6 billion worth of Ethereum. And the fact that there's even that discussion should really bring a moment of truth to the differences between even Ethereum and Bitcoin. Bitcoin is not something that could ever be rolled back. There is a finality to Bitcoin that is part of its base use case. And it's no different than the finality of cash or the finality of gold or the finality of barter. The difference between Bitcoin and those final transactions is that we don't have to trust each other, nor do we have to meet physically to exchange that value. And that is a intrinsic, it gives Bitcoin intrinsic value in terms of its use case, which is a store of value and a hedge against inflation, but also something that has been fairly and equitably distributed and maintained perfectly since its inception 16 plus years ago. So that's the main delineation and the main line that I kind of draw in the sand. Does that mean that there's not a place in the market for all the other coins? Absolutely not. It's just a different place than what I think a lot of people refer to as kind of gold 2.0. I think that's solely Bitcoin's mantle, and I don't think any other coin deserves, quite frankly, to have that mantle.
You mentioned inflation, and so there was the recent price crash of Bitcoin. I think it was in the low 80,000s now.
86, I think, is the last time I checked.
Okay, and people talk about Bitcoin being inflation-proof wealth building. You mentioned digital gold. Just thoughts on the crash, the fluctuation, guesses on price. Long term, there's the Max Kaisers out there and others who talk about it's going to hit 200 grand, it's going to hit $1 million. Just thoughts on that space.
I think that it's about time frame, right? If you're looking at the immediate time frame, you could call this a crash, but it's like 25% off of its high compared to the last 3 cycles that I've lived through. That's not a crash. That's a healthy bull retracement, and that's a place where the accumulation will start again from the big institutions. There's also something to note about the crashes or the drawdowns that you've seen in the crypto space. They're typically triggered by retail being overextended in their leverage positions. And there was $1.6 billion of margin call liquidations in the retail space that happened during this most recent drawdown. If you look at the adoption rate of the institutions and how slow they have to move to, number one, accumulate a position, but number two, just to get to a decision of what that position looks like and how they accumulate it, you're seeing adoption, but you're seeing it 12 months after they've started it. They only reveal it after they've already got their position accumulated. So I believe there's a ton of corporations that are adding Bitcoin to their balance sheet right now. I think that this drawdown provides a liquidity event that is large enough to wet their whistle and for them to accumulate the positions that they want to accumulate. And I think it's going to be par for the course going forward. I think volatility is like inflation. It's correlated to inflation. It actually, inflation drives volatility. And so the markets are ever increasingly volatile and will remain so until we go into a deflationary period, which we can't based upon us being a debt-based society.
And just your quick thoughts on other cryptos. You mentioned Bitcoin, Ethereum, and there's obviously good, bad, and ugly. With the work that you do, you just sort of invest in the ones that are good. Are there some cryptos that we should stay away from or that are not so good?
I experiment with everything in the space because I consider it to be an education. It's almost impossible to absorb the information that's coming out in terms of recent developments and um, uh, deltas that can be created in efficiency, both in the real world and on chain. You just can't keep up with the amount of companies that are out there working on problems. And so I've found it to be the best way to really put something through its test and through its paces is not to look at a chart and decide whether it's, going the direction that I want it to, but actually use the protocol for the use case that the company is touting as really what their objective is, what their mission is. And if it solves that really well, and I see the potential market application of that, then I'm intrigued and I go to the next step. And but beyond Bitcoin, like Bitcoin, in my opinion, by Wall Street, not by me, has been given the title of an inflationary hedge. It's something that's not correlated, and that provides disproportionate risk reward ratios that allow them to justify recommending between 1% and 3% allocation. Like that's what Wall Street's prescribed pill is for Bitcoin right now. That tells you what they think of it. They think it's a store of value. And, Bitcoin maxis love to argue that it's, meant for the people to transact with. And, you can live in that fairy tale for as long as you would like, but that's not what the real world has determined Bitcoin's primary use case to be. And so I just look at each of the other coins as like, okay, do they have a primary use case? Is their primary use case still relevant? Like Ethereum, let's talk about it for a second and how I kind of dissect its value proposition. It made all of its wealth, in my opinion, on the back of illicit gains during the ICO craze. Like that's what drove Ethereum into its position of power. And is that a relevant value proposition compared to Solana, for example, which offers the same kind of services? And I don't think it is. I don't think the use case is. I think that Solana is faster and cheaper, and those are kind of the two primary drivers of smart contracts. And real world assets being put on chain. So, do I think Ethereum has had to shift its use case, and is it still kind of grasping for straws as it pertains to what that use case is? Yes, but I do think that the legacy TradFi industry looks at it as critical mass of capital, and that's valuable. Kind of too big to fail. They could make a lot of wrong decisions and still have a lot of liquidity to continue to pursue wrong decisions. And so, will they find their footing, and will an application be applicable where Ethereum really shines as the value proposition in that space? To be determined. I don't know. I do know, though, that it's an easy play from a momentum perspective or from a charting perspective, because if Bitcoin continues to go up, one would have to assume that Ethereum's going to catch some of that liquidity and go up as well.
So what you were talking about with the system, the banks. So now it seems like they're treating Bitcoin as digital gold, right? Because typically gold is something you want to. I mean, that's how I approach it. I buy gold. I sock it away, whatever percentage I have, and I don't even think about it. I don't look at the price. It's kind of like a insurance long term, and so. Get your thoughts a bit on the investing aspect, because that's what our public does. And so, there's people who hodl. They ain't never gonna sell. They're hodling. And there's people who have just simply bought. They managed to buy crypto early, and they didn't do anything more than that. And number went up, and they got lucky. And then there's people who are just who are more actively buying and selling and trading. I know a few folks in Mexico here, who average folks who do that, and they say it's not easy, but they still keep at it. So just thoughts on how people can, the different approaches to investing in Bitcoin, crypto, and the space, and is there anything beyond crypto as well in this space?
Yeah, sure. Arch Public, the company that I started, is its primary mission is to give institutional tools to retail investors. And those tools are automation. Automation allows you to execute things without being in front of the computer, number one. So physical geographical proximity is now, you can be asleep, so you're not trying to force the market to adapt to your schedule and to your needs. You're able to meet the market where the market is. And so if those movements happen overnight in crypto and there's a large dip that you want to take advantage of, you have a couple of options. You can have an alert on your phone that wakes you up, and you can go in and execute that manually, or you can use automated software. And so we're trying to make the use of automated software, number one, exceptionally prevalent. So we give away our base software for free for anyone who wants to spend up to $10,000 in buying Bitcoin, Solana, or Ethereum. They can download our software, use it for free, and they can use it for free for forever, essentially, to do that. We also have a concierge division that allows you to trade a lot more capital. But the premise of it is that, number one, automation doesn't have emotion, and emotion is the number one obstacle as it pertains to kind of removing yourself from the trading equation. When things like what we've experienced in the last 48 hours happen, your tendency is to have fear and to want to sell the fear, to get out of the fear, to reduce your exposure to that fear, because fear doesn't feel good. The reality is that if you believe in Bitcoin, and let's just put it in the equivalent example of like a clothing brand that you really like. If you really love the clothing brand and you buy every time they come out with a new shirt or a new pair of slacks, you buy that pair of shirt and that slacks. You're a lifetime buyer of it. Lululemon would be a good example of I'm not a Lululemon buyer, but I know a lot of people, they just buy everything Lululemon. Well, if Lululemon announces that it's on sale by 25%, we have, as humans, the opposite reaction. We rush to the store to buy more Lululemon. But when Bitcoin goes on sale by 25%, we have the opposite reaction. We want to get rid of as much as we own. So automation allows you to remove yourself from the equation. And when you set the parameters, it's user driven, you control it, you set the rules. You can see the outcome of those rules over long periods of history so that you have a lot of confidence in that rule set. But once you set it, you're removed from the process. And it's like something that's sitting there agreeing to the rules that you set out when there was no emotion involved, and making you accountable to the strategy that you want to deploy. And that, what we found, is an incredible tool for people. And once they see it, they believe it, and it's breaking down barriers and walls as it relates to access to trading things and time periods that you otherwise could not trade.
You just made me think of my favorite pair of jeans brand. So I live here in Mexico, and it's hard to find clothing. I'm a tall guy. And basically, there's like one brand that I like on the planet Earth. I think it's called Jack and Jones. And when I go back home to Croatia, I don't care what the price is. I buy like 4 or 5 pairs. And it's been a few years since I've been back, and I'm down to like, they've fallen apart. I only got like 2 jeans left. And when I go again, I'm gonna buy literally like 5 pairs. I don't care what the price is, and it's kind of like because I need the jeans, and those are the only ones that look good and fit. And so
imagine this being the robot that sits at that jean retailer and waits for the discounts and pounces at the register faster than any human being can. That's the value proposition, essentially. An automatic jean. That's what we've created over here.
There's a new business idea. To move a little bit for a second away from Bitcoin and crypto, just your thoughts on other technology in the space, like blockchains, and how that going forward in our lives, in the economy, and in the country. How do you sort of see this developing? There's all this talk about blockchains, putting so many things on blockchains, and just your further thoughts there.
Yeah, so that's kind of proves that was kind of the next step in our conversation regarding utility. If you look at the altcoin space, I first asked the question like, what's the utility that they're trying to solve, like, and what's the delta of efficiency change in solving that utility? And there's tremendous promise across the board. I mean, I don't believe that car titles will be pieces of paper in the near future. I think they will be assets on chain that are digitally transferred. And so when you sell your car, it's going to be as simple as, instead of going and signing the back of it and wondering which place you sign and whether you screw it up. And if you do screw it up, you got to send it back to the government and have them send you a new one. Like, that's a very cost burden methodology for going about transferring a title. Like in the blockchain space, that would be a simple e-signature where I am signing on the blockchain that I've sold you the car. And if the transaction is done on chains, meaning that you pay for it with a Bitcoin or Ethereum or anything that is on the blockchain, then we can actually have proof of settlement on chain as well as the transfer of the document on chain, which is kind of the whole kit and the caboodle. So there are very, very large industries that will be massively disrupted based upon blockchain technology, but disrupted in a positive way, where you're taking an old process, like where you used to write when you would be at a restaurant and people would write on a carbon copy sheet your meal, and then they'd go type it into the, how many man hours did that absorb in that life? A lot. Whereas now they just stick the terminal on the table and you put your credit card in and you pay, you tip, everything's done. And it's like removed that labor from what their job description or what their primary purpose is. And so there's a lot of examples like that where you can remove man hours, which is the most expensive aspect of delivering a good or service to market. If you can remove man hours, you can remove cost. And by removing cost, you're more competitive in the market space. You offer your services to a larger demographic of customers. It's just good for top line growth. So you not only are saving money in managing the data, you're also able to prove the data either as transparently as you want that information to be available to the public. And so it's kind of the best of all worlds. You have an incredibly accurate database that the public can access to the degree that you allow them to, that you have no cost in managing, that gives you better data sets to make decisions off of moving forward, and removes a tremendous amount of man hours from your operational overhead. So it's like, yes, every single company will be using blockchain in the future at some point.
What about NFTs? Are they dead? What's going on with NFTs? I remember it was a year or two back or three, it was all the rage, and now I don't hear much regarding NFTs. What's going on in that space?
NFTs are an incredible use case for transferring intellectual property. It's just like any industry, though, kind of the worst use cases or the most illicit use cases tend to come out first. The transferring of digital images is not the highest and best use for NFTs. And NFTs stand for non-fungible tokens, and it just means they're unique. Right, where if you own a Bitcoin and I own a Bitcoin, there isn't a serial number on each of our Bitcoin. They're just UTXOs in the overall pool of 21 million. They're proven to be scarce in the fact that they have been acknowledged by the network as being one of the 21 million, but there is no serial number that differentiates those. Whereas NFTs, each one has a serial number. It's unique. And so when you're talking about issuing unique value, NFTs will absolutely be used. We won't recognize them as NFTs because we're used to what kind of the market defined itself as in the previous cycle, which is the transfer of JPEGs. And yes, that is a use case. It's just not the most utility-driven use case. It's more of a vanity-driven use case, and vanity-driven use cases tend to make people the most money the quickest. It's a gold rush on being attached to a brand like the Bored Ape Yacht Club. At a certain point, there was billions and $70 billion of value in that community. So will there be community driven NFT projects that actually have real world utility attached to them? Yes, there will be. We just haven't seen one yet.
What about meme coins? We had, of course, Trump, Melania coin, in Milei, and with the Libra coin in Argentina, there seems to be trouble going on with that. And so just thoughts on meme coins.
I think meme coins are, again, a natural part of the evolution of a market. Meme coins have been around for a long time. There's no difference in the meme coins. The only difference is the attention that the meme coins are getting because they've attached themselves to a real human that has real human capital attached to their lives and a lot of either goodwill or bad will, right? And so what's interesting about meme coins is that I've never seen, there's a lot of valuable things that we've discovered during the meme coin craze. What are some of those things? That a personal brand can launch something that goes to a $75 billion market cap in 48 hours. There is no mechanism that I can think of that's ever done that before, right? And did it through Apple Pay, $100 payments on the click of your phone. That is an incredibly effective tool if put to the right application, right? Disaster relief comes to mind. Like if you need to raise a bunch of money really quickly and it needs to come from a lot of different places and you don't have the infrastructure put together, a 13-year-old can get on pump.fund and have the right cause and could use that tool for an exceptionally good, use case or for a purpose. The unfortunate part is that right now it's being used for greed, and that's an ugly characteristic that nobody likes to see in human beings, and yet it's in full display at 100 miles an hour in that space. But it doesn't, there's a lot of baby with the bathwater is what I would say to people. And that technology has a ton of value for humanity if we can harness it and regulate it. And, I think there's some interesting things that have come out of some of these token launches, specifically the Libra one, is that it's a national security issue. We had more than probably closer to $400 million extracted out of the U.S. economy and put into a foreign economy with literally 12 hours of activity. Like it was almost instantaneous. And that type of wealth extraction is something that is already regulated, right? You can't take $400 million in cash in a plane and take it anywhere. That's against the law. If you wire that money, there's lots of clearing houses that are making sure that it's not going to a bad party that has bad purposes. There's just systems that are in place that govern that type of wealth transfer because it can have very negative implications on humanity if it goes to the wrong people. And you're seeing that with the ETH hack that happened with Bybit. It's this question of what now? What do we do now? They have $1.6 billion of Ethereum and they're a known, terrorist organization. So how does crypto not get a black eye? Well, you could roll back the chain. That would be, if I was in charge, I'm not, that would be probably my best solution. But it's cutting your nose off to spite your face. Like the people inside the Ethereum community don't want to highlight the fact that that it's centralized, that it's not really a decentralized effort, and that's the main argument that they've been writing as an equivalent to Bitcoin for this entire time. And there's a lot of undercurrents that are they conflict with one another as to what to do going forward. But it is a very big issue, both with meme coins and with potential hacks, is that bad people getting their hands on a highly liquid asset that they can dispose of through mixing technology very quickly and fund very bad efforts with it. I mean, that's something that I think humanity has to address as a whole.
Stable coins to look at next, things like Tether. I think yesterday it was announced, Bank of America, they're going to launch US dollar pegged crypto stablecoin. If lawmakers pass the legislation, the CEO said it's pretty clear there's going to be a stablecoin, which is going to be a fully dollar backed. It's no different than a bank account. And so just thoughts on this space. Some people say that Tether is like backing the Bitcoin price, and they're buying treasuries and debt, and that's kind of like there's this whole thing going on here. And just thoughts there.
Well, it's no different than what Michael Saylor's doing, right? He's found a debt mechanism where he can take a lot of fiat and turn it into Bitcoin and do it in a perpetual cycle, and do it without recourse that is correlated to Bitcoin's price. And if you can figure out that little money loop, Bitcoin has such a high demand and adoption curve, and it's about supplying exposure. Again, I think the new buyer of Bitcoin is not retail. I think it's institutional, and I think institutions aren't looking to make money with their Bitcoin acquisition as much as they are looking to preserve money. And those are two different driving factors when you go into an investment. And so when you're looking at preserving money, you're looking at 1% to 3% allocation, very prudent allocation. You're not really ever a seller because it's like canceling your insurance policy. You don't do that. That's the reason why you acquired it. And so, stable coins are going to be here to stay. Stable coins are the closest equivalent to a CBDC that exists today, and there's really no difference between them if the government's controlling the stable coin. Like if the US government said, guess what, Tether, you've done a great job modeling this thing out, but just like any industry, when it's a monopoly and it's in the interest of national security, we're taking over, and we're going to run it just like you guys have run it. We're going to back it with U.S. Treasury bills, and we're going to make it, because that's essentially what they've been doing. And up until this point, if you really think about the crypto space and how much scrutiny it's gotten, think about how little scrutiny the stablecoins have gotten. They've really grown to be astronomical in size with pretty smooth sailing. And I always took note to that because I think governments were most curious about watching their enterprise. I think there was the most valuable brain drain that could be going on. If you wanted to create a CBDC, you look at Tether. Like that's what they've essentially done, is create a dollar equivalent, and done it with US dollar instruments that make it true. It's one thing to say that you're a dollar equivalent, but there's counterparty risk in that statement, right? Unless you truly have dollar equivalency, unless you truly have 1-to-1, and so if you're able to accomplish that, then you're able to actually act as the central intermediary for all digital asset purchases. And I think the government, if I'm in the government shoes, I think you have to solve some of the issues regarding national security. I think that issuing a central bank digital currency, whether you call it that or not, is inevitable. And I think that's where they monitor and tax all the transactions, because it keeps it very, very clean. It's just one on-ramp that they put a toll booth on, and they know exactly what's going on the highway, and they know they've got the license plate readers, and they know exactly, all the traffic is monitored at that point at an entrance level. And then I think, once the activity enters that ecosystem, it's going to be very, very difficult to ever create, a monitoring system that allows them to tax each of the transfers and the transactions amongst different digital currencies and different real world assets that have been digitized. So I think it has to be a tax on the on ramp and the off ramp. And I think the central bank digital currency and the CBDCs, are basically the stable coins at this point.
So, I wanted to ask you that as well. CBDCs, that's been a topic I've been covering a lot over the years. And I've had past guests, they talk about the China social credit system. I've had a past guest in 2020, the Jewish renowned historian Edwin Black, who wrote the book on IBM and the Nazis, how IBM created the first paper computer it was basically like the first analog social credit system that was IBM created for the Germans. And he calls it the algorithm ghetto, right? Digital concentration camps. And so this is CBDC world that we're entering. Just your thoughts on the potential, right, turn toward dystopia in such a system. 2-3 years ago, the Department of Homeland Security banned me from PayPal, and it has made things complicated for me. I have a Rumble channel. There's some cash there. I can't take it out because PayPal is the only payout. I'm looking at other podcast hosting providers that have ad services. One that I was looking at, their only way to pay out is PayPal. So it's kind of like I'm losing opportunities here to make money. And just thoughts on the potential for you. Do you think we're going to go into this dystopian world, or is it going to be somewhere in the middle? And do you think Vivek Ramaswamy and Howard Lutnick have been calling for the abolishment of the income tax, which is fantastic, but in the world you just described, are they abolishing it because we won't need it because everything's going to be automatically taxed?
Correct. Yes. You're not moving backwards. It's just an illusion. Like the fiat is created for power purposes, and it will never lose its primary purpose in that regard. So, I always I've said this a lot of times, fiat's still the best and will always be the best layer 2 protocol. Like cash is king. Politicians will use technology to grab as much power as they possibly can, and they will do it on the back of safety and security. We've seen that. That is, kind of their ace. And crypto, it poses a danger much more so than a freedom in terms of the control mechanisms that can be implemented on chain. But I also think that's something that you can't resist. It's no different than the argument of singularity. We're headed there, right? You're not going to stop that train. So the question becomes, what alternatives will there be? And humans have a natural balance of power in the fact that we are commerce. So if a currency that we use becomes too burdensome or too cost inefficient, what happens as a byproduct of that? Bartering. And that's where we will go back to, and there will be two distinct camps. If you play this out in game theory, kind of ultimately, there'll be two camps: people included in the digital system and people completely off the map. And you will lose a lot of convenience. You will lose a lot of opportunity not going there, because they were going to make it very attractive to give up that freedom. And that's the issue. That's the thing that we always look at or should look at, is like, we agree to giving up our freedom because of convenience. That's what social media has done to us. And that's what basically the iPhone has done to us. It's too convenient for us to have an iPhone to give up the fact that it's basically, a digital tracking device that is monitoring us and advertising to us through those monitoring efforts. Like that was crazy talk 10 years ago. I remember thinking to myself 10 years ago, like, man, my social media ads are really targeting me. Like, how do they know? And I used to think, like, could they be listening to my conversations? And now everybody's just accepted that as like, okay, well, they're listening to me. That was unheard of and appalling 20 years ago to think about. And so society shifts, and we decide as a society what convenience should cost us. And sometimes the cost is fully recognized when the decision's made, and sometimes there's unintended consequences that we have to bear the cost of down the road. And I think that blockchain technology, just like the internet and just like any revolutionary disruptive technology, I do think it's going to come with a lot of growing pains as well as growth spurts. It's just one of those things, cuts both ways.
Yeah, I'd agree with your assessment that you laid out there. And from what I read, I think just the other day, crypto use globally is like 7%. It's in any cases less than 10% of the global population. Your thoughts on the rest of the world? The Chinas, the Russias, the Africas, the Latin Americas. How are they approaching crypto? Do you see just eventually all these countries going to onboard blockchain and crypto, and the average citizen is going to be using this stuff? I'm seeing an explosion here in Mexico and Latin America of fintechs, like online banks, coming online. And so no more physical bank locations. You've got like things, you got Wise, you got Revolut, you got here Nubank. I can't even remember all of their names. And so just thoughts on, what happens with the rest of the world.
Well, that's the efficiency change that's inevitable. No need to build an expensive brick and mortar building and put it on an expensive piece of real estate that you have a 20 or 30-year lease on, when you can just pop up a digital bank and have protocol pretty much run everything. I mean, that's what Bybit is. If you listen to the Bybit CEO on the Twitter Spaces, if you haven't, I would encourage you to, because it's fascinating. But they have so many dashboards where they can monitor these digital inputs and outputs, and aggregate that data in real time, where it's like a 10-second delay. So they can head problems off at the pass that you could not head off at the pass if you were running a real brick and mortar bank. So there's just this massive, goes back to the utility, driver here. Massive delta in cost to operate, massive delta in cost to prop up or to initiate. So banks are going to become, the barrier of entry is going to be lower. It's going to be digital certificates and paperwork you do digitally, and then you just have a website, and then you're a bank. And that's good. And I'm going to tell you why it's good. Because there's over 4 billion people on the earth that are unbanked. Serve the people, or technology will, is the point. And so you cannot stop. That was the initial premise of Bitcoin, which is like, okay, if you're excluded from the traditional financial system, you can be a valuable member of this financial system. You can be a valuable member by buying the Bitcoin and holding it. You can be a valuable member by buying a computer and plugging it in and running our protocol. But you could, if you didn't have one nickel to your name and all you had was a computer, you could have been Satoshi. The white paper was issued before he ever started mining. You literally could have been the first miner. I could have been the first miner. Anybody that was alive at that time period could have been the first miner. And that's what makes Bitcoin have this purity to it that, from an outsider's perspective, makes a lot of Bitcoin maxis look nuts. But they're nuts about how pure the chain has been, and how fair it's been, and how it represents a utopia of financial equality and opportunity that I think really begs all of our souls to participate at some level. And it's not fraudulent in that marketing effort, like a lot of companies are, like Robinhood. Robinhood's name evokes this little guy watching out for the little guy mentality, but they're the exact opposite, right? They're the ones that shut the little guy out of the GameStop when their money was on the line, and their partnership with Citadel was on the line. And so you look at like Bitcoin's been true to its motives since its inception, and that's something that I think speaks to humanity at a very deep core. It's something that is worthy of our trust, and there's very few things these days that are.
Well, you've pretty much covered all the questions that I've been interested in. You've done that in depth and concisely. And so, is there anything else that I haven't brought up that you think is important to get across in this space?
Yeah, I think that education is what made me fall in love with this space. And I think education starts with using the technology. And I would urge everyone that has ever had interest in Bitcoin to buy a miner and plug it into your house and contribute or run a node. It takes very little. It's basically just computing power. You can do it on your existing computer, but it's going to show you the meaning behind the name Bitcoin. It's going to show you all of these intrinsic qualities at a level that it's like looking at a great piece of art. It means something different to everybody, but it strikes us all on a chord that can't be denied. And I think that's what Bitcoin does for people. And I think if you're somebody that's in a developing country and there's no modern banking system for you to rely on, it can also prove to be incredibly useful just as a means to transfer and just as a way to interact online. There's a lot of websites that you can use to buy things in crypto now and have them shipped to your door. And again, that's access that otherwise could not be achieved without it. So use the technology, and that will make you fall in love with it.
Well, in some cases, the government is forcing me into using these technologies. Yeah, I was also taken off of Patreon. So fun times. Where are, again, your best websites, places to find you and all that?
Yeah, if you go to archpublic.com, our name means bridge to the public. And again, we're trying to bridge this gap of technology to everyone. So if you have any interest in trading, any interest in automation, any interest in Bitcoin, Ethereum, or Solana, or any crypto, come to the website, schedule a demonstration. We'll get you hooked up with the free software. You can play with it and pull reports and do a lot of historical analysis on different settings. It's a lot of fun and it's free. But I think it's kind of the first step in finding out whether this is of greater interest for you. So that's where I would urge people to go find me.
All right, we've covered the waterfront. Thank you, Tilman.
Absolutely. Thanks for having me.